Okay, welcome back to the channel. So talking about Vault Resources, and I'll probably going to talk about a few other graphite stocks. So Vault Resources, ticker VRC, on the ASX, I think about $60 million. Actually, always check the this website, not Google, because it can be wrong a lot of the time, and that's not good when you are buying shares. So it actually was sort of correct, 56 million. And just occurred to me, they got sweet all cash, so under $1 million cash. They'll probably have to raise some money. And they'll get $500 more, so not much cash. But they probably don't need to spend anything right away. So a bit of an overview of them. Projects. They also have a lithium project near to some land that probably has lithium on it in Serbia, next to a big Rio Tinto lithium project that has taken 20 years to even get off the ground, which I'm not sure if it's going into production or not. So they've got graphite in Ukraine. This is an actual working graphite mine, and if there wasn't a war going on, it might be making them $5 to $10 million a year. So we've got to wait till that ceases. So we'll go have a look at that if I can. And it's on the east side of Ukraine, so apparently not affected by war, but they stopped people working anyway. So not affected, this area is not affected by the war. As you know, it's probably around here. So that's not the biggest project, but it is a working operation once the war finishes, you'd think. When that'll end, who knows. And then you got this big project here. So we don't need this graphite for electric vehicles now, but probably in 2030, if it's going as forecasted, we will. So some numbers, the grade here. So I'll go to my chart. I think this is from a few years ago, 2020. So not totally correct. So don't go off these numbers. Vault Resources. Yeah, a lot of tons. Not the best grade. Like this other one's more grade here. But always grade doesn't point to the best OPEX. Though it can do. Like this one is just clay. Sovereign Metals Limited. It's just in the sandy clay, so they don't have to crush it up, which saves them a lot of cost. So they're probably really good on cost. And also like Renascore, having all your deposit in the one place is a bonus as well, in a good area. Close to an existing city will save you on capex, like building the mine, and opex for workers, etc. So I'm not sure what I was talking about, but they've got the small one in Ukraine, which will make 5-10 million a year, and who knows, graphite can go up in price if there's a shortfall. Temperamentally, they can capitalize on that. So they got this big one here, 127 million tons at this much percent. So they spend stage 1, spend 90 million and make 13 million a year. But then they go stage 2, which is got a big MPV. Payback 1.4 years, 20-year mine life. I think they spend under 200 million and then they get sorry, I'll just have to find this big one. Here we go. So this is a big project once it's up running. So they're the first stage, which just gets a bit of graphite in the ground, and then they spend the more money to get it, make it really efficient and get the graphite out at the lowest price possible per ton. So they do 170 tons a year, which is quite a lot, and that means they're going to have to feed through a lot of ore, because 20 times that is how much ore they feed through. And they sell it for this much apparently, which is not a given either. And then they make 200 million a year, thereabouts, in EBITDA, and the capex is less than that. So the payback period is probably 1 to 2 years, which is pretty good. And who knows, graphite might go a bit crazy, and this could go up for a bit, don't know, or it could even go down. So you pay 70 million for the company now, then they have to raise, like for the official stage not as much, but then they have to raise more, 170, which means they'll get diluted. But then probably these people from China might come in with the money and there'll be less dilution. But 60 million you have to pay now. They got no cash, just got the projects, And yes, that's pretty much them in a nutshell. So what you might expect from this company, you put your money in now. Like, the price now isn't great in my opinion. Like, buying it at 1 cent was almost a no-brainer. Like, it was a really good price at 1 cent for like 25 million for what they have. Like, the risk to reward is more in your favor, but now it's not as appealing. So maybe if you're not sure, you could wait. This is not financial advice, but you could wait and pick them up at 1 cent, because or you could just let them go and they could run off and you didn't lose money, but you didn't make money either. Just my opinion. So we'll go back to here. So in a nutshell, what happen, you're going to have to wait till 2025, like not for the price to go up, but for them to get into production, start selling all these tons, probably 2030, and that's a lot of years to wait. So as you buy it now, it probably dwindles around for a few years. They get the first project going, make a little bit of money. The graphite price could go nuts, and they could go up to a stupid amount, but yeah, there could be things I'm missing. Actually, saying that, they're also going downstream, so they're going to use their resource and go downstream, which is something I forgot. So then maybe they can make more money going downstream. So my real opinion is not super great in the price for the risk to reward ratio from here. 25 million, it'd be really pretty good. 30 million, pretty good. Yeah, so it's risk versus reward. So they're here, they're shipping it to China. Not sure what else I can say. I'm sort of more favorite of BEM and the ASX. They got a low capex, and they are in Madagascar. But they have to truck it 450 kilometers, then across the ocean to India. I think they were doing. Makes sense to do it close to where you are, because shipping costs are real. So more favoriting BEM, but my favorite of all would be on the not on the ASX, on the TSX. So $7 million, you get $3 million in cash, and you get 4 seasons of drilling, which means you're pretty much getting the drilling, this for the cost price of drilling plus the cash they have, and they are right next to Mason Graphite. So they got the same. Mason Graphite and them share the deposit, and the difference is Mason Graphite is drilled out more, and Green Battery Minerals Inc., which is on the TSV, hasn't drilled out more. So they're going to drill soon. They're waiting for the land to dry up, because I know there's muddy roads and they got to spend as least money possible to get and make the drill bit go far for the price of the money. So you have this company, you can't just blow your money. You need to make that $1 million, drill a lot of meters, so then they can drill it out and get more confidence and raise money at a better price, diluting their share price a bit less. So this, I'm not sure what happened in February, but every graphite stock had a bit of a run. So that's what can happen if there's a shortfall in graphite. Even if they're not anywhere near production, people can go a bit crazy and spend a bit more. Like, that's a 4x just from, I'm not sure what happened, but in February 2021, Mason Graphite, this company, and Lamico all went up around then. So you don't buy then. Like, the risk, this price isn't getting much lower. Could sit there for a while. They might have to raise money and drill more, so it might dilute it. But it's pretty low, and they got really good grades. So they got Mason Graphite, like the best grade, besides Talga, which is $500 million company. So you've missed the boat on that one, even though there probably will be some more X's. Who knows? Mason Graphite, 17%. So high grade. I think Mason Graphite's main core that they'll be mining first is 25%. So you can buy the neighbor for Mason Graphite's, I think, around 60 million. I think they got a bit of cash as well. But my favorite pick is Green Battery Minerals Inc. The risk to reward is good. So obviously this risk, probably the same risk with Green Battery Minerals Inc. is maybe Vault Resources and also probably more risk with Vault Resources. I don't know. But the risk reward is probably best on this company, in my opinion. BEM on the ASX is pretty good. And then you got IG6 on the ASX, which they got plans to go downstream. I think they have 50 to 60 million, so you pay a bit more, but they're in Western Australia. And Renascor just got a loan for the government to build the mine, so hopefully International Graphite will get that similar loan from the government, and it won't dilute share price when they're building the mine. And also they got they own the downstream, sort of the same as Renascor will. So we don't need the batteries right now, but we're moving towards it. And the graphite stocks, the graphite price has gone up like 20% lately, but it's nothing like lithium. So I assume that if we have a shortfall in graphite, the prices could go a bit crazy, and therefore every share price might go up a little bit, even though they're not near production. And then some ones getting into production can capitalize on that high price if they have tons that are not in contract, etc. So my favorite is this one, like pretty high risk, but a high reward as well. Second favorite, probably BEM, and then IG6, third favorite, and then probably Vault Resources. And then actually another decent one is TON, 37 million. They're going to start small, do a small resource, get it going, and then they're going to build up bigger as well, so you can look into their MPV. All these graphite companies are sort of similar. Like, you spend 200 million and you make $200 million a year if the graphite price is right. So there's 37 million. Not sure how much cash they have. They got a pretty good resource. Another thing about this company is they had this massive resource here, huge, with good grade, and Mozambique government took it off them. So now they're with this one here, which is actually around 40 million tons, and that can grow also. It's actually pretty close to the port in Mozambique, so they don't have to truck it so far to the port, but then they truck it all the way across that ocean. So they're okay as well. And then actually, like, small stocks that can grow into the big ones. So Renascor's good OPEX, but they've already grown, so I see the upside is diminished, although there's probably good upside there as well because they have a really good project in a really good area, good OPEX, so they can get out of the ground lower than everyone else. So they'll make money in the bad times and make more money in the good times. Graphite 1, not sure. Vault Resource, alright. Magnus, already grown. Don't know much about them. Northern Graphite actually bought, they got a pretty crappy resource, this one, but they've bought out 2 operating mines, and they seem to know what they're doing with graphite because they've been in it for so long. Not sure. So I said this one is a sandy clay one, so they've got a good OPEX as well. Malawi. Not sure about this one. These guys, I'm pretty sure, sold their things to a Canadian stock. Ecograph. They're doing recycling and they got a thing. Not really sure about them. They're pretty grown as well. Big $1 billion company that's already in production. Deals with Tesla. Wouldn't buy them because they're already grown, but who knows. This one was good. But you could pay 50, I think it's like, it was up to 60 million. You could pay 60 million for this, or you get this one, same sort of risk, for only $7 million with $3 million cash, but they had to do a bit more drilling to get up with Metals Australia. But Metals Australia also have an alright lithium project as well, and they've already done all the drilling and done the MPV, whereas these guys are yet to do their MPV, and they need to do a bit more drilling. But I'm sure the graphite is there, because the graphite's definitely there. They just have to drill it and find out exactly where it is, in my opinion. Back to this one. Telga, really good, but already grown. Focus Graphite, decent. They're near Metals Australia. They're about 60 million, I think. Buxton, not sure. Mason Graphite, I said. I'm buying their neighbour, not them. Talga, really good. Already grown. So, with all that said, top pick, these guys. Pretty high risk, but high reward as well. Second, probably BEM on the ASX. Maybe IG6. Then maybe Volt. And then maybe Ton. But who knows, you could buy a basket of all and maybe they go up when the graphite price rises. They've all got pluses and minuses, and you just don't know who's going to succeed, really. Even if you rank companies each day, you still probably would be saying what you do. Sometimes you just got to pick one thing and hope for the best. It's probably a pretty bad investment saying. This is not a financial advice. But my pick is these guys. One, because they're probably unknown. Their website's pretty crappy. When they do drill and find the stuff, you already know it's going to be there. Like, the announcement will come out about drilling, it'll go up that day, but you can buy it now because you know that announcement's coming. They're drilling it now, and they could miss some holes, but then you know the next drill season they'll hit, and the price will go up. And if graphite rises, you know it's just going to go up. Or you can assume, but it's all a gamble, really. So, my favourite pick by far, and I've put the money in there. So that tells you, yes, it was my favourite pick. So that's it for me. And the natural graphite, if you want about natural and synthetic, apparently they just mix it. Synthetic's got better, will last many more years. But they can probably do the same with synthetic. And a battery lasts in years and years. Like the LFP batteries apparently last forever. Where some nickel chemistries can cause to fail, I don't know. You'd really have to study batteries. So yeah, that's it. Graphite. We're gonna need the graphite. Not right now, but slowly and slowly, there'll be more cars coming. We need more graphite. Some mines will start. We might have short supply, might go up. They might have too much, might go down. Might have a world pandemic, goes down. But then eventually we'll get to 1 year where all the cars are coming out and we'll need all that graphite for electric vehicles and storage. And if they make the battery even more efficient, then more people can afford it and they'll buy more graphite. Graphite's like a small cost of the battery compared to like some things like nickel. And that's probably all I'll say. So not financial advice. Do your own research. You can actually ring out these companies. Like the companies will all say they're really good. Of course, you're going to ring them up and say, yeah, we're really good. So you want to cross-check what they say. And just remember, they're salesmen. Their money's in Volt, so they're going to tell you, yeah, it's really good. So you have to say, is it really good? Or are you just trying to get me to buy shares so you can have more money? So cross-check. Like, this guy's not going to say that this other project is crap. Or some might. Who knows? So that's all from me, and I'll see you in the next video.